Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started right away. We're starting a little early today because of a commitment I have. Markets are generally flat today. Dow Jones is down slightly. NASDAQ is up slightly. S&P 500 is flat. Oil is up 1.6% or $1 per barrel to $65 per barrel. The yield curve is up a few basis points, especially in the middle part of the curve. You can see here that NVIDIA is up 2%, Google is up 2%, Broadcom is up 1%, Palantir down again. I think Palantir is down about 20% in the last couple of weeks. Tesla is up 1%. Everything else is pretty much down. Wall Street slips as Powell-led momentum wanes. Wall Street's main indices dipped on Monday, retreating from gains made in the previous sessions after the U.S. Federal Reserve Chair Jerome Powell hinted that an interest rate cut could be considered at next month's central bank meeting. Recent economic data suggesting labor market weakness has boosted investor confidence that the central bank could switch to a dovish stance in September, despite the majority of policymakers warning that U.S. tariffs could add to inflationary pressures in the coming months. The Personal Consumption Expenditures Price Index, the Fed's preferred inflation gauge, is due to be released on Friday, while official non-farm payrolls data is expected next week. The reports will be crucial, especially after Powell said the dovish verdict was not a certainty. The most important report between now and September is not the inflation numbers, rather the jobs report, says Thomas Hayes, chairman at Great Hill Capital, New York. As long as we show continued cracks in the labor market, the cut in September will happen, barring some egregiously high inflation numbers. Powell's comments nudged major brokerages to revise their expectations, with Barclays, BNP Paribas, and Deutsche Bank currently seeing a 25 basis point reduction in the borrowing costs next month. Traders now see an 80% chance of a Fed rate cut in September. Friday's optimism helped the blue chip Dow close at a record high for the first time since December 2024, and the benchmark S&P 500 logged its strongest daily gain since May. On Monday, Jefferies became the latest brokerage to raise its year-end target for the S&P 500 at a time when companies have tempered tariff-related forecasts. 10 of the 11 subsectors edged lower, with consumer discretionary leading losses with a 0.5% drop. Traders are awaiting AI darling NVIDIA's earnings on Wednesday to see if its $4 trillion valuation is justified. The potential impact on NVIDIA's forecast from its recent revenue-sharing deal with the U.S. government will be closely watched. The chip major's shares were flat in early trading. In deals-related moves, beverage company Keurig Dr. Pepper slid 8% after saying it would buy JDE Peet's for $18.4 billion in cash. Furniture retailers RH and Wayfair declined about 7% each after U.S. President Trump said on Friday his administration would conduct a tariff investigation on furniture imports. Intel dipped after Trump said the U.S. government was taking a stake in the chipmaker, which the company said could limit its international sales and future government grants. Trump also said that he would make more deals similar to the one with Intel. We're going to look into that a little bit. Remarks from New York Fed President John Williams later in the day will be scrutinized to see if he shares Powell's policy outlook. U.S. to take 10% equity stake in Intel in Trump's latest corporate move. This news is all over the channels today. It could be a pretty drastic change in U.S. policy. Let's read about it. President Trump said on Friday the U.S. would take a 10% stake in Intel under a deal with the struggling chipmaker that converts government grants into an equity stake, the latest extraordinary intervention by the White House in corporate America. The deal puts Trump on better terms with Intel's CEO after the president recently said the CEO should step down due to conflicts of interest. It will ensure that the chipmaker will receive about $10 billion in funds for building and expanding factories in the U.S. Under the agreement, U.S. will purchase a 9.9% stake in Intel for $8.9 billion or $20.47 per share, which represents a discount from the $4 from Intel's closing share price of $24.80 on Friday. The purchase of the 433.3 million Intel shares will be made with funding from the $5.7 billion unpaid grants from the Biden-era CHIPS Act and $3.2 billion awarded to Intel for the Secure Enclave program, also awarded under Trump's predecessor, Democratic President Joe Biden. Intel stock rose roughly 1%. after closing up 5.5% during the regular trading. Trump met with Tan on Friday, a White official said. That followed Trump's August 11 meeting with the Intel CEO after Trump demanded that Tan resign over his ties to Chinese firms. Quote, he walked in wanting to keep his job and he ended up giving us $10 billion for the US. So we picked up $10 billion, Trump said on Friday. It's a little crazy. Like this sentence right here kind of pits the US government against a US company, which is wild to me. Commerce Secretary Howard Lutnick said on X that Tan had struck a deal that's fair to Intel and fair to the American people. The Intel investment marks the latest unusual deal with US companies, including a US government agreement allowing AI chip giant NVIDIA to sell its H20 chips to China in exchange for receiving 15% of those sales. Other recent deals include an agreement for the Pentagon to become the largest shareholder in a small mining company, MP Materials, to boost output of rare earth magnets, and the US government's winning a golden share for certain veto rights as part of a deal to allow Japan's Nippon Steel to buy US steel. The federal government's broad intervention in corporate matters has worried critics who say Trump's actions create new categories of corporate risk. Ahead of the US deal with Intel, Japan's SoftBank agreed to take a $2 billion stake in the chipmaker on Monday. Some industry observers still question Intel's ability to surmount its problems. Daniel Morgan, senior portfolio manager at Synovus Trust, said Intel's problems are beyond the cash infusion from SoftBank or equity interests from the government, singling out Intel's contract chip manufacturing business known as its foundry unit. Quote, without government support or another financially stronger partner, it will be difficult for the Intel foundry unit to raise enough capital to continue to build out more fabs at a reasonable rate, he said. Intel needs to catch up with TSMC from a technological perspective to attract business, he added. I agree. The government's stake is to be passive ownership and does not include a board seat, Intel said. The government will be required to vote with Intel's board when shareholder approval is necessary, with limited exceptions. Intel did not specify the exceptions. The equity stake also includes a 5-year warrant at $20 a share for an additional 5% of Intel stock, which the US can use if Intel loses control of the foundry business. Federal backing could give Intel more breathing room to revive its loss-making foundry business, analysts said. But it ceded the AI market to NVIDIA and has lost market share to Advanced Micro Devices, AMD, in its central processing business for several years. It has also faced challenges in attracting customers to its new factories. Tan, who became CEO in March, has been tasked to turn around the American chip-making icon, which recorded an annual loss of $18.8 billion in 2024, its first such loss since 1986. The company's last fiscal year of positive adjusted free cash flow was 2021. We're going to read the summary on this one. Intel warns U.S. stake could hurt international sales, future grants. Intel warned that U.S. government's 9.9% stake in the company could harm international sales and limit future government grants. The stake, acquired through $11 billion in government grants, may also subject Intel to additional regulations and restrictions, impacting its non-U.S. business, particularly in China. Despite CEO stating Intel doesn't need the funding, he welcomed the U.S. government as a shareholder. In other news, Ørsted stock falls to record low after U.S. government issues stop work order on nearly completed wind farm. We're going to read the summary on this one as well. Actually, let's just read the article. Ørsted stock fell over 16% to a record low on Monday after the world's biggest offshore wind farm developer said the Trump administration issued a stop work order for its nearly completed Revolution Wind project off the coast of Rhode Island. Late Friday, the Department of Interior's Bureau of Ocean Energy Management ordered the Danish company to stop activities on the project. Ørsted said the project was 80% complete with all foundations in place and 45 out of the 65 wind turbines installed. The offshore wind project was expected to deliver power to 350,000 homes in Rhode Island and Connecticut. The order cited national security interests as a reason for the action, but did not define the particular concerns. Ørsted, which owns 50.1% owned by the Danish government, said it's complying with the action and evaluating all options to resolve the matter expeditiously, including legal proceedings. The Trump administration's stop work order on the Revolution Wind undermines efforts to expand our energy supply, lower costs for families and businesses, and strengthened regional reliability, Rhode Island governor said in a statement. We are working with our partners in Connecticut to pursue every avenue to reverse this decision. Same thing. This isn't the first time the US government has ordered a major offshore wind project to stop work. In April, BOEM halted Norwegian energy company Equinor's $2.5 billion Empire Wind 1 project to power 500,000 homes in New York. However, BOEM lifted its stop work order in May and the project resumed. Throughout his second term, Trump has pressured the wind and renewable energy industry while championing fossil fuels. On August 20, Trump called the wind and solar power the scam of the century, exclamation point all caps, in a Truth Social post, where he also sought to link renewable energy to higher electricity costs. As one of his executive actions, Trump temporarily paused all federal wind permits, which remains in effect today. Trump's signature tax and spending law, the One Big Beautiful Act, also accelerated the phase out of wind and solar tax credits. And last Thursday, the Trump administration said it opened a Section 232 investigation into imported wind turbines, which sets a path for imposing tariffs. Analysts viewed the investigation as a way to increase wind project costs and further hamper the industry. Construction for Ørsted's The Revolution project began in 2023 after it received federal and state permits under the Biden administration, and the wind farm was expected to be fully operational by 2026. 3 years, actually. All right. On macro, U.S. consumers with prime credit are starting to slip on payments. U.S. consumers with the highest credit scores are starting to fall behind in debt repayments, credit scoring company Vantage Score said in a report published on Monday, in a sign that America's financial health may be deteriorating more broadly. Late repayments over 90 days were up 109% year over year in the Vantage Score super prime segment, while the prime segment posted a 47% increase year over year. In relative terms, the sharpest increase in delinquencies was seen in super prime and prime customers, who are typically considered the most financially secure. Even though in absolute terms the increase is modest, it shows that even consumers considered the most credit healthy are also beginning to see some stress with regard to payments. There has also been an uptick in late-stage delinquencies in auto loans and mortgages as consumers grapple with budget strains. Defaults in the early stage, which constitute late repayments between 30 to 59 days, increased at the fastest pace in auto loans and mortgages. Defaults on secured loans, such as mortgages, typically happen only when the pressure on finance is too much for the consumer to manage. New originations for auto loans and mortgages also fell in July. Americans are getting more sensitive to price changes. Walmart, the world's largest retailer, has scooped up market share from rivals as wealthier consumers frequent the store more often, worried about the effects of tariffs on prices. U.S. consumer sentiment also softened in August as households anticipated higher goods prices because of import tariffs. Inflation concerns have been weighing on consumers. Last month, U.S. banking giants said consumers remain in good shape, but warned of potential weakness ahead. There were concerns that spending could cool off in the second half of this year. And our final article on Elon Musk's XAI sues Apple and OpenAI over AI competition App Store rankings. Another bullshit. Billionaire entrepreneur Elon Musk's AI startup XAI sued Apple and ChatGPT maker OpenAI in the U.S. federal court in Texas on Monday, accusing them of illegally conspiring to thwart competition for AI. Musk earlier this month had threatened to sue Cupertino, California-based Apple, saying in a post on his social media platform X that Apple is behaving in a manner that makes it impossible for any AI company besides OpenAI to reach #1 in the App Store. Sounds like bullshit to me. It's probably going to get thrown off. But you know what I was thinking today? I was like, man, under Tim Cook, Apple has developed several products and services that over 1 billion people enjoy. And there's not a single product that Elon Musk has developed over 1 billion people enjoy. So on that note, thank you very much, everybody. And I will chat with you all next time. Take care.